We're going to crack open the one document that has all the answers, the income statement. And I'll show you how to see it not just as a boring page of numbers, but as the actual story of how a company is doing, whether they're winning or losing.
I mean, this is the million-dollar question, right? You see all the hype, all the flashy headlines, but at the end of the day, is the business making money? It doesn't matter if you're thinking about investing, maybe you want to work there, or you're just plain curious. The income statement is the tool that'll give you the real answer.
So what is this thing really? First off, forget everything you think you know about boring spreadsheets. The best way to think about an income statement is like a story. Seriously, it's got a beginning, a middle, and a very clear end. And it tells you exactly how a company did financially over a set amount of time, like 3 months or a whole year.
Okay, so let's get into what this financial story is all about. You can really think of it as a journey. It starts at the very top with every single dollar the company makes. And then, step by step, it subtracts all the costs until you're left with the one number that really matters, what the company actually gets to keep in its pocket.
You know, every good story needs a killer opening line. And in the world of finance, the story of whether a company is profitable or not, well, it starts right at the top, with a number called revenue. You've probably heard it called the top line. So revenue, that's the big flashy number you see right at the beginning. It's all the money that comes in the door from selling stuff, whether it's products or services. But here's the key thing you got to remember. At this point, it's just a raw number. Not a single penny of expenses has been taken out yet. And this is where the plot thickens. That huge revenue number looks amazing, right? But a company has to spend money to make money. So the next part of our story is all about subtracting all the different costs that start to chip away at that big, impressive starting number. This whole journey is actually a really clear step-by-step process. The easiest way to picture it is like you're walking down a staircase. You start way up at the top with revenue, then with each step you take down, you subtract another kind of cost. And you keep going down until you finally land on the last step, the final profit number at the very bottom. All right, let's take that very first step down the stairs. Right away, that big pile of revenue gets smaller. Why? Well, because you have to subtract the direct cost of making whatever it is you just sold. It's simple, right? You can't sell a cup of coffee if you didn't buy the coffee beans in the first place. This is what's called the cost of goods sold, or what you'll almost always hear is COGS. It's pretty straightforward. If you're a coffee shop, your COGS are the beans, the milk, the cups. If you're a car company, it's the steel, the tires, the engine parts. The key is, it's only the costs that are directly baked into the product itself. So what you have left after you subtract COGS, that's your gross profit. And listen, this number is way more than just a stop along the way. It's a really powerful clue. It tells you exactly how profitable the company's main product or service is and how good they are at making it. And this is before we even think about things like paying for marketing or the office rent. Okay, time for the next chapter in our story. We take that gross profit number, and now we subtract the costs of just running the business every day. Once you do that, you get to a new number called operating income. So what are these operating expenses? Well, think of them as all the costs you need to just keep the lights on, the stuff that isn't part of the product. We're talking about salaries for the marketing team, the rent for the office, the electricity bill. You'll often see these all bundled together under one acronym, SG&A. It just stands for Selling, General, and Administrative Expenses. All right, so we've taken care of the cost to make the product and the cost to run the company. We are getting so close to the end. We're basically at the climax of our financial story now, the final super important number that everybody's been waiting for.
And here it is. Net income. You've definitely heard of this one. It's the bottom line. After you subtracted every single possible expense, and I mean everything, like interest payments on loans and taxes to the government, this is what's left over. This is the ultimate scorecard. It's the happily ever after, or, the tragic ending to our story. But hey, just because we've hit the bottom line doesn't mean the story's over. Nope. Now comes what's arguably the most important part. The analysis. This is where you go beyond just looking at the numbers and start to figure out what they actually mean for the company.
So you might be thinking, okay, that's cool, but who is this story even for? Like, who's actually reading this stuff and using it?
The answer? A whole lot of people, actually. Investors. They're looking at it to figure out if a company's a smart investment. The company's own management uses it to make big decisions and keep costs in check. Even employees will check it out to see how stable their job is or if a bonus might be coming. And of course, banks and lenders need to know if the company's making enough to pay back its loan.
So, how do you really analyze this story? Well, there's a simple but super powerful tool called profit margins. Basically, instead of just looking at the raw dollar amounts, you turn those profit numbers into percentages of the total revenue. This tells you something really important. For every single dollar that comes in, how many cents does the company actually keep as profit? It makes it super easy to see if a company is getting better or worse over time, or to compare it, apples to apples with one of its competitors.
Now, here's something you absolutely have to remember. As powerful as the income statement is, it's only one chapter of the book. To get the full picture, the complete story, you have to look at it with a couple of other things.
Okay, so if the income statement is like a movie of the company's year, you also need two other reports. There's the balance sheet, that's like a single snapshot in time of everything the company owns and everything it owes. And then there's the cash flow statement, which tracks the actual cash coming in and going out. And that's a big deal because being profitable isn't the same as having cash in the bank. You really need all three of these to understand if a company is truly healthy.
And this quote right here just nails it. The income statement isn't just some boring static report card. It really is a dynamic story, a narrative of a company's financial journey over a period of time.
So, we'll leave you with this. Now you have the keys. You know how to read this financial story. You can go look up pretty much any public company's income statement and see for yourself exactly what's going on under the hood. So the only question left is, which